It's an oversaid phrase, Nathan, but silver is probably the most undervalued commodity there is right now.
Hi, this is Nathan with Independence Money, where we always ask the question, if your money's not independent, how independent are you? Live at the Silver Symposium 2022, David Morgan with the Morgan Report. Welcome.
Nathan, thank you.
Thanks for being so involved and, being the keynote opening and everything like that. So what are some of the topics or speakers you want to kind of let the audience know about the content you can see here?
Well, obviously it's focused primarily on silver. My speech touched on the silver PSYOP, crypto conspiracy, and the bail-ins. All topics that aren't silver directly. Silver PSYOP pretty much, but that was about how much did the crypto market interfere with money that might have gone into the precious metals. And my determination was very little effect in Bitcoin or in cryptos versus gold, because gold is vastly bigger market than the crypto market. Silver, it could have an effect. So that was my speech. I think some of the more interesting ones, Chen Lin, and these are friends of mine in almost all cases, talked about technology and advances in solar panels, and it's irreplaceable. And the trend for silver is still bullish, even though we don't feel that right now. Jeff Clark did a great job on showing how silver does, and I'll have to plug myself, but I coined the phrase scare you out or wear you out. It just wears you out. It just goes sideways, 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 and then boom, it takes off. I just give example after example after example. So here's everybody kind of down in the mouth, silver, and he showed where we are. And by the law of averages, which doesn't mean anything, but on the aggregate, if you average everything, it's going to go up 150% within the next 7 months. So.
Wow, that's a big jump.
Yeah.
I mean, I always say that I'm a little bit more investment agnostic. I believe in basic diversification, but the commonality, I like deep value. So whether that's deep value with the international real estate we talk about, or in this case, silver, or if stocks are your thing, it doesn't really matter. It's buy something that it has intrinsic value. In this case, silver is used. It's not just a speculative thing. It's being used in industrial, and especially in green energy. Right. And then play the long game.
Yeah. Well, I like that, and there's a term for it that's not heard very often. It's called value investors. I mean, if you go back to the, Graham book, you're looking at, what is the value? What is in that company? How much did it cost for the land? How much did the capital outlay be for the warehouse? How much for the production factory? How much, it was basic. Are you buying value or are you not buying value? Of course, now with the go-go momentum, earnings don't matter, putting all the money you want mentality, these stocks aren't priced correctly at all, in almost all cases. There are some that are. So I like your approach. I think we're going to go heading that way more and more. And it's an oversaid phrase, Nathan, but silver is probably the most undervalued commodity there is right now.
I think that's kind of facts. You can't buy lumber, you can't buy copper, you can't buy oil. Nothing is as cheap as it was, as silver is, relatively speaking. But it's used so much, and it's used in green. As far as I'm aware, we don't have an efficient way to recycle spent solar panels, but I think I read somewhere the average American house requires something like 32 ounces of silver if you were to solar panel the whole thing.
Right. No, I did a couple studies, and one publicly and one privately, that there's not enough silver on the planet to go solar for the United States residential wise. Then if you go commercial, it's even more. So it takes like 1.2 billion ounces to just power the residences of the US. And we only mine and recycle 1 billion ounces a year. So how do you do that? And then it takes like 50% more for industry or for commercial activity, your churches, your schools, your movie theaters, your restaurants. So that was 1.7 billion ounces. So if you add them together, you come out with like 3 billion ounces just to power the US. And there's not that much silver.
Yeah. That's a lot. What I learned here at this conference is to invest in precious metals doesn't necessarily mean you have an apocalyptic view. I think you and Jeff Christian made the point 20 to 25% has been a very long-standing portfolio efficient size. You want to elaborate on that?
No, I mean, Jeff did the study. There's others, Ibbotson and Associates, Harvard purportedly did one. I've never been able to find the Harvard study, but portfolio analysis says what's the best balance? Stocks, bonds, real estate, blah, blah. Well, gold is in every portfolio come hell or high water, as the expression goes. So under all economic conditions, inflation, deflation, stagflation, nationflation, whatever it is, it doesn't matter. Gold helps outperform by having it in your portfolio, period.
And I don't
That's a message no one gets.
And I don't think it's speculative, because when you look at central bankers, including the United States and foreign countries, they are putting gold on their balance sheet.
Absolutely.
It's not like they're taking a big flyer here.
Yeah, right. No, and then the nation states, as you know, Nathan, I mean, look at China and Russia. And this is typical. I'll go a step deeper. When you have the productive capacity changing locations. So that's the way the Austrian school thinks of wealth. They don't think of wealth as in terms of gold or paper. They think of it as who's producing the most wealth. And that means who's growing the most food and who's producing the most widgets, the most cars, the most factories, the most machine tools, the most airplanes, whatever. And that shifted to China a long time ago. And what's interesting about the means of production, which is wealth the way we define it, is gold is always going the same direction. So if you look what's happened from from England to the US, London had all the gold, not all, but had the lion's share of the gold and the productive capacity. They were the wealthiest nation by that definition. Then the productive capacity moved to the United States and all the gold went there. Now the productive capacity's gone to Asia and the gold's gone there. It's interesting.
It follows. It's like follow the money, right?
Yeah.
So very, very interesting figures here. So let's talk about one of your keynote presentation, your highest hitting YouTube interview. Let's just hit on a little bit of that.
Well, I'd done an interview with USAWatchdog.com with Greg Hunter, and I talked about bail-ins. And it was highly watched and a successful video. All my videos with him are great. And Daniela caught it, and she just was pretty excited. She said, I really want to do the same topic. And I go, okay, but I kind of went through this, She said, this is blowing my mind. I haven't heard this. She was excited. She said, okay, fine. So I said, well, I'm pretty pushed right now. I could do it from the car. I got about an hour. And she says, okay. So I turned my stupid phone on and looked at it from the dashboard, never knowing in my wildest dreams that thing would go viral and have 2 million views, right? But it was all about bank bail-ins and why you are at risk if you have money in a bank.
Yeah, and again, I mean, I don't think you learn this and you need to run out of the building with your hair on fire, but you need to know that it's laws and it's facts, and you need to just be aware and take precautions.
Yeah, you don't, exactly, well said. You don't want to overreact, but you need to have knowledge and then hopefully take some action on that knowledge.
Well, do you mind letting our viewers know what I'm doing here tomorrow?
Well, you are speaking here tomorrow, right?
Yeah, but what?
Well, you are the tax guy, and you know how to work, I won't say work the system, work within the system legally, ethically, morally to help maximize people's potential with the least amount of tax consequences. And you're a rare breed. There aren't too many of you. I'm very glad I met you last year, and I'm happy to help promote you in my newsletter and other places. So thank you for being here.
We appreciate you.
You're welcome.
All right, live from Silver Symposium. Keep checking in. Appreciate the likes, comments, and shares. And thank you, David Morgan.
All right.